Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, traders waiting on key U.S. inflation data out later today. We'll discuss that with Michael Strobaek, Chief Investment Officer at Lombard Odier. But first, technology and politics once again dominating headlines. The U.S. is planning new regulations to prevent advanced chips from being sold to China. Now, the SEC is suing Elon Musk for allegedly failing to disclose his growing stake in Twitter in a timely manner. Let's discuss all of this with Bloomberg's executive editor for Global Tech, Peter Elstrom, and our EMEA news director, Roz Matheson. So thank you both once again for joining us. I mean, it's always tech and it's always geopolitics that seem to be dominating the news. Peter, what are the latest round of chip controls? And then how much does it tie in the next administration? Inauguration is next Monday.
It's almost hard to keep track. We're only a few days away from the new administration coming in, and you have the Biden administration rolling out new rules almost by the day. So the latest round of rules take a focus at companies like TSMC, Taiwan Semiconductor Manufacturing Corporation, which is the most important chip maker really in the world. They make the chips for NVIDIA and also for Apple. What they have been doing is they've also been crafting chips for a bunch of Chinese companies. In the past, it was for pretty much all of them, including Huawei Technology, the company that has been blacklisted by the United States. But what the latest rounds of rules show is that these foundries, TSMC, Samsung, Intel also, are no longer going to be able to make chips for Chinese companies without restrictions. The U.S. government wants to change the parameters so that they need a license first before they make certain kinds of advanced chips for these companies. And the reason for that is because some of the chips that TSMC made in the past were made for a different company within China and then ended up with Huawei, even though it's blacklisted and it's not supposed to be able to get its hands on those kinds of chips.
Rosa, again, also a lot going on, of course, with some of the confirmations on the Republican side. I don't know how much of a surprise it was yesterday to see the Republicans rally behind the Pentagon pick.
Well, in a way, it's unsurprising because none of them seem to be willing before the hearings to say publicly anything of great concern. Any of that disquiet that we saw in the initial stages of Hegseth's name surfacing for the Pentagon chief dissipated pretty quickly. And even though we expected the Democrats to go hard for him in that hearing, and again, they did exactly that. All the main allegations against him, all the allegations of sexual misconduct, of public intoxication, the things he denies are already out there in the ether. The real fundamental question is he qualified to run the Pentagon, and what would he do as Pentagon chief? What are his views around, for example, women in combat and so on, or just deploying the U.S. military overseas? It's an enormous edifice, obviously, for the U.S., and it's embroiled in a bunch of areas overseas of high tension and proximity to war. So in a way, were they concerned about that? You didn't see a lot of questions from Republicans about that. And again, more broadly, it shows that Republican senators by and large, seem to be falling in line with Donald Trump even before he's inaugurated, not wanting to be the ones who publicly challenge his thinking.
And Peter, I mean, Elon Musk is in court with the SEC, this time over Twitter. What do we know?
Yeah, Elon Musk has had quite a few clashes with the Biden administration. He's also had a lot of clashes with the SEC, the securities regulator in the U.S. The latest issue has to do with Musk's buyout of Twitter. It all goes back to March of 2022. He was buying shares in Twitter without disclosing it publicly. Apparently, he'd gotten up to 9%. You're supposed to disclose at 5%, and you're supposed to disclose within 10 days. It actually took him 11 days to disclose that he'd gotten to this level of 11%. The SEC alleges that cheated shareholders out of money. If they had known Elon Musk was actually buying up these shares, they maybe wouldn't have sold, or they would have asked for a higher price. So the SEC wants a penalty from Musk. His lawyer has been very, very critical of their requests. He said these are minor violations. The SEC is asking for about $200 million. He thinks they should pay about $100,000. But it's very likely this lawsuit is going to go anyplace because the Trump administration is taking over in just a few days.
Yeah, there's going to be a lot of changes in the next few days. And Donald Trump is floating this idea of creating an external revenue service to basically collect tariffs on foreign imports. Is it controversial?
Well, it's interesting. Is it a name? Is it branding? Is it what exactly is it? He just floated this idea of an ERS overnight. I mean, there's already a government institution that collects these duties, customs and border protection, and they are customs duties. So the duties are actually paid by US consumers. This is not an external fee. I mean, it's kind of the price that consumers are paying for these things, and it's a small amount of revenue overall. It's about 2% or something. And so the question is this about just rebranding the existing machinery of government? Is he planning something else from it? It's very, very unclear. But what it does show, again, he's pointed in his thinking very much towards the idea of tariffs on other countries, and possibly much broader than we've seen before. It's really something he's not going to let go of, even if he goes more gradually on tariffs than he indicated initially. But again, at this stage, it's just a branding thing.
Okay, thank you so much for the briefing. I mean, you never know if it's the branding or something else. Ross Matheson and Peter Elstrom, we really get the A-team to cover our top stories. Now, for more on markets, we're joined by Michael Strobaek, Chief Investment Officer at Lombard. Odier. Michael, thank you for joining us. Again, there's quite a lot to wade through in terms of tech, in terms of these fights with the Justice inauguration on Monday. But I guess your number one problem or concern is inflation. Where does it go from here in the U.S.?
Good morning, Francine, here from Geneva. The buzz and the focus of markets has obviously been the pretty sharp rise in long yields in the U.S. in the last 3.5 months or so. And we'll see some numbers in terms of CPI today as to is it really an inflation problem or is it a reflection of a normalization of what we call the term premium, which is essentially that you get compensated for taking longer term risk from bonds. And our view is it's probably a reflection of better growth and also a bit of sovereign risk premium because of the debates about the US deficit.
So, Michael, I mean, and you're right. Last week, I mean, there were questions, there were debates. It, ended up also infecting, or the UK ended up being, part of the epicenter for this bond rout. Are you expecting a lot of volatility? How do you view risk in the next couple of months as we try and figure out policies and tariffs from Donald Trump?
Certainly. I mean, we're in a phase of volatility and normalization. I mean, post-COVID, we've seen, of course, as we know, inflation roaring back and the Fed, of course, starting to dramatically raise short-term interest rates. We had at certain points, of course, a quite deeply inverted yield curve. All of this is normalizing, but the situations are between the US and the UK, of course, are quite different. In the US economy is strong, inflation is normalizing. There's a question about what is the Trump administration going to do in terms of tax policies and so on. And is the debt there a problem? Our view is very clearly it's not. The UK, on the other hand, has about half growth of the US. As I've said, and as we've discussed you and I before, the UK needs to come to a situation where it is on fiscal sustainability. Mm-hmm. Bond vigilantes in the UK are much stronger than they are in the US, and I am not quite certain as to whether politicians in the UK have understood the seriousness of this, and we'll see how that plays out in the coming months. Our view is very clearly that bonds in the US, because of these levels, are becoming more attractive. We've been underweight treasuries in the US, but we've been overweight actually UK gilts and German bonds, because we believe the European story is really much more about softening of growth and therefore coming down of long-term yields.
Michael, overall, what's the biggest unknown out there apart from I guess geopolitics and tariffs? And is there a concern that this could weigh on earnings per share for companies? And so U.S. equities have already priced in the best news.
I would still say the proof is in the pudding on inflation. I mean, we're quite sort of confident that we can land the disinflationary trend. But of course, with Trump coming in, the fact is that we will sit at higher levels in the US. We will diverge dramatically in other regions because we have a different growth outlook and also inflation there coming down. Our view is, as you know, the ECB is far behind the curve. They need to do much more. And for markets in general, this is a tightrope of high equity inflations as yields are going up. So we'll probably have to just wait a few more months. Maybe we get even a dip in equities because people get really nervous about these yield levels, but that probably could be a dip to buy. But I think the first half, of course, the biggest uncertainty is what is Trump really gonna do that he is saying. Tariff is short-term clearly a negative on markets, so therefore we could see a further trigger of uncertainty and corrections because of that. But midterm, if he starts implementing some of his policies that he has publicized, US growth could look good, and therefore we could start the climb again in equities, if you will.
I mean, there's also quite a lot of going on, of course, in currencies. Most analysts expecting a stronger dollar because of the policies, but we also know that Donald Trump probably wants a weaker dollar. So what are your top three risk-on bets for 2025, given all of the uncertainties, Michael?
Well, the top number one, as you just alluded to, really is a stronger US dollar because of rates differentials and because of now yield differentials. That will draw a lot of capital to the US because it's simply, from a total return perspective, more interesting. So the dollar is one of our top views. Number two, we're overweight right now US equities. We do believe that we are in a cyclical bull market that for sure is a bit sort of longer dated because we've now seen 2 years of total returns of north of 40%, but they can, in our view, continue to grow on the back of strong earnings, Trump policies. And if I were to pick one again, look for Japan. Look for corporate governance, positive earnings dynamics, etc. in Japan in the face of a yen that look relatively weakish, and that's good for the Japanese equity market. So go for those directions. We like gold still in this geopolitical political environment. So those are sort of our top likes, if you will.
Michael, thank you so much, as always, for joining us. Michael Strobaek, their Chief Investment Officer at Lombard Odier. Now, coming up, new risks to oil supply. We'll discuss the latest with the IEA's Toril Bosoni. That's next, and this is Bloomberg. Now, the International Energy Agency says global oil markets face a smaller surplus this year than previously expected. This comes amid stronger demand and new risks to supply. I'm joined exclusively by Toril Bosoni, the head of Oil Markets Division at the IEA. Thank you so much, Toril, for giving us a little bit of your busy schedule, as always. Now, despite the U.S. sanctions, and we had fresh ones actually announced last week, you haven't changed, you're still seeing actually Russian production rising this year. So is it that you're seeing the sanctions as not that big a deal?
No, not at all. We expect these sanctions to have, they're intended to and expected to have quite a significant impact on Russian oil supply and global markets. But we think it's still too early to determine what that impact will be. So we're waiting to see how things will unfold before putting a number on it. But just to put it in context, as you said, we were expecting to see a relatively balanced market in 2025. As growth from other non-OPEC producers exceeds our expected demand growth. So there is some room to accommodate losses, not just from Russia, but also potentially from Iran.
So can you give us a rough estimate on how much you think Russian output will be? So the question is, because the latest sanctions, of course, two of the major oil companies were sanctioned. They were producing about 1 million barrels a day between them. But importantly, a lot of tankers, 160 tankers carrying Russian, Iranian oil, were put on the sanctions list. And these tankers in 2024 transported about 1.5 million barrels a day of mostly Russian crude. So there's a wind-down window of about 60 days where they can still
discharge, but they cannot load any more oil. So the question is if non-sanctioned, non-grey fleet tankers will pick up the slack, because they could so if the oil is priced below the price cap of $60 for crude. So this is what we have to see, how other actors may step into the market to move that oil, and what the buyers will do. The major buyers, obviously China and India and some other countries in the Middle East, how they will react to these sanctions is what we're waiting to see.
Toril, your report also shows a narrower oil surplus actually for 2025 than previously thought. Does that mean that there's any room for OPEC Plus to proceed with plans to restore supply?
Yes, so we have increased our demand growth slightly for the fourth quarter and 2024. Cold weather in the Northern Hemisphere was a large part of that, as we've returned to colder weather after two winters. Last winter in 2023, it was relatively mild. So we're seeing oil demand boosted in the US and Europe, but also in Asia due to colder weather. But we are still expecting supply growth from non-OPEC countries of about 1.5 million barrels a day in 2025, which is more than the 1 million barrels a day of demand growth that we expect for this year. Of course, with Russian supply and Iranian supply at risk of disruption, there will maybe room for OPEC to unwind cuts as they have signaled for some times that they plan to do in 2025. OPEC Plus today, we see them sitting on about almost 6 million barrels a day of spare capacity. So they have the opportunity to do that if the market conditions should warrant.
And Toril, will you see the Trump administration's policies actually significantly increase oil production?
It's hard to say. We think in the short term, policy decisions tend to have a minor impact on oil supply, of course, but the U.S. is already expected to be the largest source of oil supply growth in 2025. Although the growth has declined or eased from recent year, we're expecting about 600,000 barrels a day of increases in oil supply in the United States in 2025. That's marginally lower than the 700 that we saw last year, and more than 1 million in 2023. So U.S. is already expected to be the largest source of growth. And as for the new policies, we will wait to see what those are and how they will be implemented to assess the impact on our forecast going forward.
Toril, thank you so much. Tori Bosoni, there, head of the Oil Markets Division at the IEA, of course, on this new report out today. Much more to come. This is Bloomberg.
Oil price cap. I have been advocating for this when I was Prime Minister of Estonia, and I'm really pushing for this to be lowered because it has a clear effect. What we see on Russia's side, I mean, they are struggling because their national fund is depleted and they don't get the same revenues that they did from oil and gas. But there's still room that we can use, and definitely the countries need to discuss that.
Well, that was the EU's Foreign Affairs Chief, Kaja Kallas, on seeking to lower the price cap on Russian oil to deprive Moscow of revenue. And the UK City Minister, Tulip Siddiq, has resigned from government. It follows an ethics review into allegations she benefited from properties that may have been acquired with funds embezzled with the ousted Bangladeshi regime of Sheikh Hasina, who is Siddiq's aunt. Now, Tulip Siddiq says she has acted with full transparency. She's been replaced in her ministerial role by Emma Reynolds, who was formerly chief lobbyist for the industry group, the City UK. Well, coming up, South Korea's president is arrested over martial law fiasco, the first incumbent to be taken into custody in the nation's history. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. UK inflation cools unexpectedly for the first time in 3 months as traders add to BOE rate cut bets, while markets now await US CPI data for clues on the Fed's path ahead. Now, the US plans to unveil new rules to curb the flow of chips to China as part of a flurry of measures introduced in the final days of the Biden administration. And Elon Musk is sued by the SEC, which claims he cheated Twitter shareholders out of millions by waiting too long to disclose his growing stake in the company. Now, Yoon Suk-yeol has become the first sitting South Korean president to be arrested. That's after investigators launched a dramatic pre-dawn raid on his residence following his short-lived martial law declaration. Let's get more with Bloomberg's Jill Deeses. Jill, thank you for joining us. So how did the arrest actually unfold?
Well, Francine, obviously there's been quite a bit of build-up to here. This is all, of course, in response to his decision, President Yoon's decision last month to declare martial law. Investigators from the Corruption Investigation Office had been trying to bring him in for questioning. He had defied those orders, and this all kind of culminated, just the other week in a really dramatic attempt to sort of pull him in and arrest him. Of course, they were met, though, those corruption officials were met with resistance from quite a few from Yoon's own security detail. So this was their second attempt to do so. He ultimately decided to just go along with them. He said that he wanted to avoid unnecessary bloodshed. There were several concerns that this would have resulted in a very violent confrontation. But at this point, he's gone along working with those investigators there. He's been brought to detention. And then within the next 48 hours, maybe a bit less there, those corruption officials are going to have to decide whether they want to sort of extend an order to keep him detained for a bit longer as they sort of sort through this, as you mentioned, this very unprecedented arrest of the South Korean president.
Are there concerns for instability in South Korea, which of course is a U.S. ally, a key U.S. ally, just as Trump is about to take office?
Yes, I think that's a good question, Francine. I mean, I should point out that this sort of arrest is very separate from an ongoing impeachment proceeding that's actually taking place, with Yoon. He's already been stripped of his powers. There's an impeachment hearing that's kind of, that could take weeks or months to ultimately resolve, trying to decide whether that's permanent. That's going obviously concurrent with whatever results from this arrest. And this is a really, South Korea is a very key ally for the United States. There's a lot of, sort of concern over how exactly this relationship unfolds when Trump has made it clear that he's open to, putting tariffs not just on U.S. adversaries, but also on U.S. allies. There's a lot of concerns over Trump's relationship with North Korea, for example, that obviously entered his relationship with Kim Jong-un, entered the international conversation back during his first term in office. So I think these are questions when you do have this power vacuum within South Korea, questions about who will ultimately be leading the country, how exactly, this process against, this President Yoon is going to resolve, and where things will go from here does leave a lot open when we're just days away from the inauguration of the incoming U.S. president.
Jill, thank you so much, as ever, for a terrific briefing. Jill Deeses there from the very latest on South Korea. Now to France now, where the French Prime Minister, François Bayrou, has offered to renegotiate a contested 2023 pension law. Now, the pension reform concessions come as Bayrou seeks the backing of lawmakers to stay in power and urgently adopt a budget.
La loi de 2023
The 2023 pension reform law is expected to first push the legal age of retirement to 63 by the end of 2026. Therefore, a window of opportunity has opened. I would like to set a shorter-term deadline by the fall when the next Social Security financing law will be discussed. We can seek a new path of reform without any totem and without any taboo.
Now, Southern California residents exhausted by a week of wildfires, evacuations and blackouts are facing another night of critical fire danger. Returning Santa Ana winds are threatening to fan the flames, with more than 10 million people facing what officials call a particularly dangerous situation. Estimates of the insurance bill keep rising, with Keefe, Bruyette and Woods also now seeing losses as high as $40 billion, double their previous estimates. And Meta is to cut roughly 5% of its staff through performance-based terminations, affecting about 3,600 people worldwide. In an internal note seen by Bloomberg, the chief executive, Mark Zuckerberg, says he has decided to raise the bar on performance management. Now, the Instagram owner plans to hire new people to fill their roles later this year. And the UK government has unveiled a new plan to harness artificial intelligence for public services, expanding supercomputing projects and attract technical talent to the UK. Critics say Keir Starmer's Labour Party has been slow to introduce such policies, and Britain has no formal laws to regulate AI. Now, that's in contrast with the EU, which approved the world's most extensive rules last year. My next guest is a leading authority on regulation in the sector. Ivana Bartoletti is Global Chief Privacy and AI Governance Officer at Wipro, one of India's biggest software services firms. She's also founder of the think tank Women Leading AI. So, Ivana, thank you so much for joining us. There are many questions about where AI goes from here. What's the right approach for companies and especially countries? Is there a worry that if you regulate before you understand the power it does, you get left behind?
I mean, I think the main issue is not regulation. The main issue is bad regulation. And I think to an extent, AI has always been regulated because it's not new. And also because it doesn't exist in isolation. So legislation like privacy or data protection, security, or human rights, consumer legislation, they've always applied. I mean, if you look at the US and the role the FTC has been playing over the years in protecting consumers from the harms of AI, has been quite substantial. Europe has taken an approach, which is the European AI Act, which is risk-based and to an extent considers an AI product as any other product. So, but with a twist in the sense that harms to fundamental rights of individuals also need to be taken into consideration. The UK has unveiled a plan, which I think is a good plan, which is very broad and ranges from data centers to skills. Of course, the detail will be in the implementation, but I think the UK is, to an extent, doing what many countries are doing right now, which is to say, how are we going with AI and how are we ensure that we harness innovation, but at the same time, we safeguard and protect people's rights. So, for example, because there is a lot of emphasis on AI use in public services and the NHS, for example, the government is quite clear that technologies like privacy-enabling technologies, they need to be at the heart of how data is shared for example, AI use in health.
So, Ivana, how, for example, is Wipro balancing this compliance? Because, again, it's the desire of clients to move rapidly on AI implementation while safeguarding everything.
For me, the key point is to move beyond the hype. See, that's the thing. Because it's all good to talk about AI skills, but one key point for me is to say, how can organizations take the most of artificial intelligence, starting from the question of, what is the problem that I'm trying to solve? AI can enhance productivity, can make things more efficient. Employees can be very relevant because they know products, they know their products, so they can really play a key role in understanding how to work with artificial intelligence. And then obviously what is really important is the sound governance framework that enables the whole organization to come together to understand how AI changes the workplace. And what is the impact on from a technological standpoint, but also in terms of the wider organization and employees as well.
So is your go-to-market approach with respect to AI different in the EU versus other regions like the US, for example, because of the regulatory change?
Well, you're actually touching something very important, which I think is for businesses is crucial, which is the fact that, of course, divergence across different countries matters, because what happens is that if countries have different requirements, then obviously when you work with clients operating in different jurisdictions, you have to make sure that you code and you hardcore into what you produce and work with clients on legal protection, security and data protection and privacy, which of course can be different across jurisdictions. But I also think it's important to understand that there are things that are the same all around the world. Privacy, for example, coding privacy into AI is something that is not just European. You know, privacy matters in the US, in India, in the United Kingdom. So there are some elements: transparency, privacy, cybersecurity, robustness, human oversight, which cut across jurisdictions. Of course, there are differences, and this is why it's really important on the governance side that the UK continues to lead on how we globally want to govern artificial intelligence. This is important for the world, and it's important for business as well.
Ivana, you also have at Wipro, of course, a lot of financial services as clients. How are they thinking about AI and how they're implementing it?
Yeah, it's really interesting because AI in financial services is, first of all, financial services an area which is regulated. And in fact, if you think, for example, the role the FCA, together with the Information Commissioner, have been playing in the UK, is certainly not new. The role of, for example, what is the implication of artificial intelligence used as algorithmic decision making decisions around people's and their in financial services. That is something that has been in the heart of the discussions for a very long time now. So I think financial services are the ones that are heavily regulated, but it's also ones where artificial intelligence can really bring a lot of productivity gain and efficiency. And this is it's both in relation to managing clients, but it's also in relation to investment and wealth management more in general. I think this is where we are putting a lot of effort in ensuring that legal protection and regulations are coded and embedded into all the products that we work on in this space.
Ivana, thank you so much. Ivana Bartoletti, their Global Chief Privacy and AI Governance Officer at Wipro. Now, coming up, VW braces for another tricky year with no new electric car models. We'll bring you the latest on that story next. And this is Bloomberg. Well, the EU's climate commissioner says tougher targets would give predictability to the auto industry rather than being a hindrance. Now, he spoke exclusively with Bloomberg's Oliver Crook in Brussels.
This is a tremendously important industry for Europe at large. I think it employs roughly 13 million people in Europe. It is hugely important for our overall GDP, and we will make we will go to great length. We'll do our utmost to secure that this sector has a very bright future here in Europe, full stop. Having said that, many in the car industry actually tell us at the same time that we need predictability, that we need to stick to the 2035 goal, and that we can be much more effective in helping them out in making sure we protect the level playing field, in making sure that the loading infrastructure that people need to drive from A to B is actually there. And frankly speaking, I think Europe should do a better job, a member state should do a better job in investing, that they need way more investments in the grid. So I think that package in the end is far more effective. Now you're going to tell me that I didn't answer your question, and you want to know about the the fines. I cannot yet say how that eventually will play out. But what I can say is that we had roughly the same situation, I think, in 2020, when just before the deadline, there were huge worries about how these fines would play out. In the end, only one company was fined, and it was only a fraction of what was anticipated. So then what can we expect in terms of these fines? Well, how much money do you think we're looking at for these car makers? What I think is here again, we should not look at this one-dimensionally. What we need to do is we need to make sure we have a dialogue with all the main stakeholders in this, again, tremendously important sector that we will never, ever let down. And that is precisely what Ursula von der Leyen is embarking on. Have a dialogue on all the necessities, also all the requirements, because make no mistake, various players in the sector have different demands. Some might like to change part of the regulation we have. Others are ferociously lobbying us to keep things exactly as they say, because they are saying, well, we already made the investments. So I think what we need to do is take the full picture, have that conversation with them in the weeks to come, and then come up with a long-term and short-term solution that is good for Europe and that is good for them.
Well, that's the EU's chief climate, of course, speaker talking to Oliver Crook in Brussels. Now, after a tough 2024, Europe's biggest automaker, Volkswagen, is facing another trick year. Deliveries are at risk of slumping again, with its namesake VW brand having no new electric car models this year. Well, Bloomberg's global automotive editor, Craig Trudell, has the very latest. Craig, first of all, I know everyone's keeping you busy, including Elon Musk, but what stands out to you most when looking at the VW sales?
Yeah, I mean, I guess the biggie for me is looking at China. The performance in the fourth quarter of last year was not particularly strong. It was kind of a continuation of the theme that we saw throughout 2024. I was a little bit surprised that the company came out and sort of, put a stake in the ground to say we're going to get back to 4 million units in this market. I don't know how exactly you get there if you're VW. And this is a company that, I think there was a general sort of assumption that we would see this sort of steady march, right, of ever higher electric vehicle sales. For them to have a setback in 2024, I think is really troubling, given where the policy is going, as we just heard from the audio that led into this.
So what's 2025 like? A gap year? I mean, do they just say, like, look, this is going to be a reflective year, or is this the time where we have to push against even U.S. policies when it comes to EVs? I
think there is some question of how much did VW try and sort of strategically put off what deliveries it could from 2024 for 2025, to the extent they had customers who put in orders and they sort of slow-walked actually delivering those vehicles so that they could count toward 2025. Because I think, sort of universally the expectation is they're going to need to get some help, some outside help, in order to comply with these tougher rules coming into force this year. And there are some real questions about, where that help is going to come from and whether it makes sense, from a policy perspective in Brussels to really have, a company like Volkswagen potentially have to pay the likes of Tesla or, say, BYD to help comply with rules in this region. I think you'll find some folks in and around the EU who will say that doesn't make a whole lot of sense.
So again, what's the strategy to get back on track? Is it new models? Is it just complying? Is there anything? Do they need to team up with someone who does, desirable cars? Yeah, I mean, I think this is a company that does have cooperation with Xpeng, a Chinese company that is held in pretty high regard, and in high regard for some of the elements of electric vehicles that VW has real weaknesses. I would point to software being the main one. There's a similar sort of cooperation happening in the U.S., of course, with Rivian, but that's not going to help them much at all here in Europe, right? This is really a sort of North American-focused cooperation. So, here in Europe, this is still a company that is in a dominant position. We should give them credit for still being far and away the number one in this market. And yet there are some real questions about, just how sort of tenable that position is, given where the industry needs to go and the challenges they're having getting there from an electric vehicle perspective. Okay, thank you so much, Craig Trudell. They're a global automotive editor. And then I need to ask you about the Cybertruck, because I saw the first one actually in South America, and we followed it because I was so intrigued seeing it on the road. It's not easy on the eyes. I mean, it's quite robust, I would say, Craig. Thank you, as always. Now, one of the top red stories on the terminal at the moment, Germany's economy shrank for a second consecutive year in 2024 and is unlikely to grow much in 2025. Now, it's only the second time since 1950 that output has contracted for 2 years in a row, and lays bare the challenge for the country's new government once snap elections are held next month. Coming up, Wall Street earnings season kicks off today with Wells Fargo, Citigroup, and JPMorgan all due to report. We'll bring you the preview next, and this is Bloomberg. Welcome back, everyone. Now, Bloomberg has learned that Jen Piepszak has been named JPMorgan's new chief operating officer, but she's ruled herself out as a possible successor to chief executive Jamie Dimon. And now BlackRock is also seeing its succession outlook shift as senior executive Mark Wiedman is choosing to pursue opportunities outside the company. Well, joining us now for more on this, and of course to look ahead at the start of Wall Street earnings later today, is Bloomberg's Jenny Surane. Jenny, thank you so much for joining us. I mean, what's going on in the water? I feel like, some of these two big financial companies, suddenly everything's in the shift with succession talks.
No, I think you're exactly right. I think it's an interesting time, and I think a lot of this just boils down to the fact that you have two chief executives, Jamie Dimon and Larry Fink, that have been in their post for a very long time. They're really considered almost statesmen of finance, and so it's hard to imagine life without them on Wall Street, but obviously that's what these boards have to do, and so this is multi-year processes where they obviously look at lots of different candidates and put these guys and gals through the ringer. But I think, yeah, it's interesting that it's all coming to head kind of at once. But it'll be interesting to see if we actually kind of see either of these two, titans of industry move on anytime soon.
I mean, Jen Piepszak for me was interesting because did she rule herself out of becoming CEO, or does she just not want the attention in the next couple of years?
I think it's time will tell. So what we reported yesterday was that JPMorgan, a spokesman for them, said she's not interested in the role at this time. And so it's a super interesting time then for JPMorgan, because I do think she was obviously considered one of the real front runners for this. And so now the spotlight sort of shifts back to some of the other top executives that they have in the wings. But I think she was one of the ones that was being kind of groomed and expected to possibly take place. And so it's definitely kind of put the pendulum back in swing, as it were.
Jenny, in 20 seconds, what are we expecting from earnings? Is it all Trump policies?
I think Trump policies and yeah, I mean, rates. So if rates aren't coming down as quickly as everyone once thought they were, does that mean that these guys have a little bit more room to run on the revenue side? That's certainly a welcome news, in addition to Trump coming in place next week and bringing all of the deregulation that he's supposed to bring.
Oh, those earning calls. I can't wait
Indeed.
for all those earning calls to try and figure out what they're thinking. Jenny, thank you so much. Jenny Surane, there, who leads our finance team in the UK. Up next, Bloomberg Brief, Manus Cranny in New York. This is Bloomberg.